Then, so first we'll start with Bitcoin today, mm, and then we'll go through all other active coins. Now, this week was actually a good week to start with. Previous weeks, 2 weeks were solid. If you look at this week, amazing bounce of the 30 to 32 33k level, and then last week was even better. This week there were a couple of things that came in and that put pressure on Bitcoin. Number one is inflation numbers, which is strange but not strange for me. As far as BTC's reaction is concerned, because I'm not someone who is in the camp who believe that Bitcoin is a hedge. I don't think so. It hasn't proven that way. Bitcoin has, so when I say hedge means it's not that people will buy when there is a rising inflation. People are buying because they see value in future, and it is acting more like tech stock, and that's what I believe. It is not that a situation there is a when there is a challenging time like COVID, it fell badly in February, March 2020. It should have gone up, but it didn't. It followed stock market. Recent time we saw how it followed stock market. When I say followed means went along with stock market. And when this Ukraine Russia news came in, gold spiked up, natural gas spiked up, oil has been rising anyways, but the oil as well spiked up, and Bitcoin went down. So if you consider these events, whether inflationary data or COVID situation or potential war kind of situation, Bitcoin actually dipped or corrected significantly rather than going up. And it hasn't seen any major equity side downside, like because it started in 2019 2009, and the financial crisis happened in 2008-9, and since then stock market has been going up. So it hasn't seen anything adverse from the stock market. So it hasn't been tested. So many people are right in saying that Bitcoin has been going up, and you're right. I mean, because since 2009 even the stock market is going up. Now people compare about the percentage gain. Of course the asset is new and it's speculative asset, so percentage gain wise there is no way any asset can compete with Bitcoin. But if we put aside the percentage gain, uh, overall percentage gain, and focus on behavior, the behavior is more like stock market to me, and not like a hedge. So time will tell, but so far whatever incidents I saw in recent times, it points me that when there is crisis, Bitcoin is not going up but down like stock market. um, Again, we are open in terms of our understanding, but based on the fact or based on recent events, I don't think Bitcoin is a hedge. Okay. And yeah, so this is a vast topic, but I wanted to briefly touch base this point, because mm, because I think when there are challenging time, like potentially when the rate hike comes next month, different banks are expecting different rate hike. Like some banks are saying 25 basis point means 0.25% hike, or some says 0.5%, and so on. So everybody's speculating. Another thing is the stock market is highly volatile. The Bitcoin is relatively better than stock market in last few weeks or few days especially. The stock market is more volatile than Bitcoin, and that is good for Bitcoin in a way, right? However, the direction wise, the direction is not so different. That's one thing. So far, that has been an observation on my end. Now, it means that the macro factors that are affecting stock market could affect Bitcoin, and I'm keeping an eye, closely watching, and I'll be updating. So there's no need to worry. We have key levels on my chart, as you see. I updated day before yesterday. These are very simple to follow. These levels are simple, and when there are regular correction for the alts, you go by the approach A, where uh, you go by money stop loss method, rather than, we do have some levels, we do have support levels, but I would suggest that you follow money stop loss. If anyone has any question on what is money stop loss, refer the approach A under best practices. It's very simple, and I think that makes more sense, because supports are not necessarily stop losses. Okay, for alts, supports where it could react, but support could be deep sometimes, and that depth may not be acceptable for some traders, because the percentage loss could be much higher. So, and different people would have entered at different levels. That's another reason why support is not necessarily stop loss, and I explained that in best practices as well. So I would say best practice is, everybody should go at least once and understand and ask me if anything is not clear. Very important. Whether you follow it or not, it's your choice, but I think at least you could go through once and see, um, and try to see if it makes sense. Okay, I strongly suggest that. And yeah, so as far as supports are concerned, when right now Bitcoin support matter the most, unless any alt making new low. So as you could see, as far as BTC bounce is concerned, BTC is around 30% on the upside, like roughly 28, yeah, 28%, close to 30%, which is like still a good number, right? In terms of, there is, it's not even near the low. However, if you see any alt which is near the low or trying to make a new low, to me that's at risk, and then only you can look to that alt individually. Otherwise, you can follow a Bitcoin support level. Okay, so these are the three support levels. um, S6 is at 40780, S7 at 39250, and S8 at 3560, 35650. Personally, I'm going to reduce my positions which I took near 33k, which I updated you everybody. I'm going to reduce as per these three levels. Very simple approach, right? I don't believe in hope. I believe in planning. I believe in data, because hope doesn't help in trading. It may help in pacify the mind, and but it's a temporary solution. I don't think it's anywhere near to the reality. So don't hope for anything major, or anything major on the upside or downside. Go by the data, and if you believe in the technicals, then go by the support. Everybody believes in something, and that's all right. I believe in key levels, price levels. So I said what I'm going to do. It's not that it's I would always say, but I sometimes say when time is critical. Otherwise, that's not something I do often. um, so it's not an advice, of course, disclaimer. It's just a sharing of what I have planned to do. So my approach is simple. As far as risk mitigation is concerned, I'm going to act like a bot. If this is broken, I'm going to reduce. If this is broken, I'm going to reduce further. If this is broken, I'll be out 100%. And it's very simple planning. So when it is here, I don't think too much about downside risk. I have, just because I have a plan, I don't care. I would have an alert at different levels, and I'm going to act like a bot. So so I shared what I'm going to do. If you think that it's your choice, if you think that it makes sense, and if you would like to follow that one. Okay, now why I'm saying this, as I said, this is something I share very rarely, because this recent time, like last few weeks, the level is a significant level, or level where it's kind of a make or break level, and we'll see that on higher time frame. Okay, so let me zoom out, and we should switch to Bitstamp. I'll zoom out. Okay, now it's very important we understand the life cycle of wave. I have explained this in academia. I posted some samples, and in different occasions I explained, but I'll explain one more time. We have some new users join, so for their benefit as well, but there's enough material. Those who join recently, I would strongly suggest you go through best practices, and second, you go through academia to understand some TA stuff. So that's for some learning. So it is important that some basic understanding would help. So I'm going to spend little time explaining the life cycle of any wave, TA stuff. This is very important to understand where we stand in a big picture. And I would not just talk about the ongoing wave, but I'll just go a little far in past, starting from 2015. And this was the beginning of the bull run, which lasted for around 2 years. And the way it progressed is in like this kind of a parabolic curve, right? Everybody knows this. As part of this game, as part of this move, there were 30 to 40% corrections. If all this you see, there was significant correction. Okay, and then this is the first drop. Okay, this was the first drop which actually retested this last major correction. Okay, so I'll remove this and highlight. So you saw how it went up, and there were like 30 to 45% correction in between, multiple 1 2 3, and there are 7 8 major corrections in between. Okay, like this. And this was the last major correction. This was the last major correction. When Bitcoin hit the all-time high, it retested this level, and it created a base like this. Okay, it went up, then it kept coming on the base, put pressure, and it created a descending triangle in this case. So basically there were bounces, but these bounces were never made new high. Okay, and they kept punching on this line and eventually broke down. Then it found a support near the second last level, near which eventually close by. Okay, and it had a, and then since then it went up. Okay, it went up, almost touched this level. You see, I use green color, some other color. Oh, ignore the spikes. So this was, and then, but it could not make new all-time high from here. It retraced. And then it started going up, and we can ignore this because this is a forced breakdown because of COVID. So this is loss or waste of, this was waste of time. So this is an anomaly, not, and I would mark as black purposefully to indicate that it was a detour. For a better visualization, and I would like you to consider something like this would have happened. From here, so you can say we can bridge like this and ignore what happened in between because it was a forced. But when I say ignore, means we cannot ignore the fact, but I'm saying that what we saw here, we could have seen that from here. That's the point I'm making. Okay, so far I explained at a high level that how last bear bull run had multiple correction, and the first major drop retested the last major consolidation zone. It went up but not high enough, then consolidated, never made new high, kept on punching this line, eventually broke down and tested this low, which was second congestion from the top, and it retested. If this would have broken down, probably it could have touched this level and so on. It didn't happen. It stopped here, retested this level and bounced off. It went to the highest point of the bounce and then retraced, and then it should have gone up, right? But then COVID came, and then that's why I put a black box. So we think from a continuation point of view. Now if we fast forward, right, then actually the bottom was here, went up, retraced here, and then you can say it if I extend this one, I remove this one for now. If I extend this line and it never went below, if I may push it higher, so it kind of retested this level, right? So here it retested this high, and here it retested this low from where it broke down. Okay, and then went up and then continued on the upside. This is how it behaved. So to me, in my definition, in my book, the bull run started here. I mean, it's an opinion. This is my opinion. You can say it's not a big deal. I mean, saying that bull run started from March. Some people say bull run started here. I give my explanation. To me, this is a detour because of COVID. So whether you say from here or here, there is not much of a difference because this is 3900 and this is 3600. So there's not a huge difference between this, right? So this is also 36 and this is 31. Sorry, my man. So that still this is not a huge difference. Anyway, so the point is, so the bull run that we see right now has begun. Now the bull run of this is very different in nature compared to the previous bull run. Okay, in a previous bull run, it was very simple Very, when I say simple, means very straightforward parabolic move, and it had multiple 40% on an average correction if you measure this. So for example, if you measure this one, this is like 37%. So 30 to 40, 45% kind of a range of correction that you observed during this, and there were multiple. But it maintained the arch throughout, more predictable. And it, so first it started like flat, and then changed the angle, and then the angle got steeper and steeper, and this was crescendo, the ultimate point, right? And that's how it ended. The history doesn't repeat, never repeats, right? So each time the wave structure could be different. If you look at this one, this is a totally different wave structure, where I would, so I'll just remove this. I just hit this for a reason. This is the new wave structure, very different, um, where there are more segments, not like quick 30-40% correction in this 2 year phase, right? So this is December, and we already have, like time wise, this is like year, if you consider this is already third year, fourth year, so we already passed 3 years. So this bull run is going on for 3 years. Okay, very different. So this bull run is longer. If I may go even further in past and look at this one, this bull run was steeper even than this, and it was shorter. So what is happening is the wave is expanding. The wave is expanding. You see, if you draw this, this is steeper, this is less steep, and this is even, so it's flattening, not like horizontal, but it's not as steep as it used to, right? So this is the fourth cycle. In Bitstamp we have only 3 cycles. There's four, there is a, there's one more cycle, not captured here, but if I have it in other chart, right, over here, which was like inception, like right in the beginning. This is near vertical move, right from the 2009 10, until 11, and shorter period, right? So this is the steepest one. Okay, so let's go back to Bitstamp again, right? So we had the steepest one here, and then less, and then lesser, and so this is very important to understand that how this cycle Bitcoin is developing over time. Okay, so the current bull, we are in the fourth year, and it's very different. Now how it is different is, so I'll remove this drawings. Okay, so I'll remove this one as well, we don't need, just for clarity. This is being recorded, so if you have missed, don't worry, you can always watch the video. Now if you look at it, so I'm considering this was the beginning, not this one in a true sense. So this, you can say, let's divide it. So this is my first segment, this is my second, and this is consolidation phase, this is third one, the consolidation phase. I'm just drawing horizontal for reason. I'm not doing zigzag to show you. I'm just covering the upper bound here. Okay. So so you see, this is a wave. Touch. This is a wave, but it's segmented very differently compared to this one, where there were small segments and frequent corrections of 30-40%. Here, larger segments, prolonged consolidation, deeper correction, and a longer overall wave structure. Very different. And of course, the price wise also pretty significant gain. Um, I mean, still, I mean, in percentage wise may not be, but um, segment wise significant. For example, this move was like quick move without major correction. This move was major move without any correction. Hardly 15% correction we had, hardly 15%. And then 50-55% correction here. And here also major correction here. We never had this kind of structure here. There were all 30, 40, 50, 40% frequent corrections. Here it was different, 10, 15 correct for 50 correction, and then deeper one, more than 50% correction. So totally different structure. Now, so this was a consolidation phase, very long, including this COVID phone. And then, so this was the beginning. This is a consolidation phase, and then it gave this second leg. So this is the first leg, consolidation, second leg, consolidation. Now this consolidation is not so different than this, as I said. If you think from, let's say, if this was the low, probably it should not have gone this deep if this was not a COVID situation. So in that case, you could have compared this one with this one, actually speaking. This is also rectangular kind of a thing. It could have been a little different. Probably this would have been a little different. Anyways, the shape could be different, but the point is behavior is similar, right? Long consolidation and then probably gone up like this. So this is what is happening here. Now let's focus more on the more recent time phase. So this was all-time high. First correction, and the first correction touched the last congestion area. Like as I explained here, when it corrected, it hit the last congestion area in this bull run. Similarly, when it corrected, it hit the last congestion area, which I'll highlight with this box. So that gave us 29K. And then it consolidated, gathered energy, went up, and then retraced from here. The retracement, the reason again here was COVID news, and there could be some other news in between. Also, this move was because of ETF. Reasons could be different. And when we do TA, we don't give reasons, but sometime any major event, we just cover that. Okay. Like this week, if we talk about major reason, inflationary data, last month, we talk about Fed's decision on quantitative easing and potential, rate hiking and QT quantitative tightening and all that. Those are significant fundamentals. So they are going to play their roles here. Nevertheless, when we talk about technicals, um, this is a consolidation phase, and when the consolidation phase, we get a boundary, we get a higher This is a boundary, upper boundary and a lower boundary, a bound, upper bound and a lower bound. And that upper provides us a breakout levels, upward breakout and a downward breakout. I'm talking about macro scale, very high scale. Okay, I'm talking about the wave level, breakout level, not something local here. Okay, so from a big picture point of view, this is what we track and this is what we track from a macro trend point of view. Now, so you see, I started with very like past and then zoomed. Now I'm slowly zooming in, coming close to the present time. So you get to know what was in the past, how overall wave developed in last few years, what is what happened in last 1 year, what is happening in last few weeks. Unless you know all this, you cannot have understanding of the future, potential future. Nobody knows the future, but if you want to project what could be the next, you cannot determine by one day movement like many traders do and react. You have to have this kind of understanding of the past overall structure of the wave, its progression, its upside move, its consolidation phase, and so on. Unless you understand this, it's very hard to understand its overall direction in for the coming days. And this is important to bring the maturity in your trading. Whether you're short term, long term, it doesn't matter. I think this is about understanding the subject of understanding the Bitcoin's price action. So the your style could be anything, but unless you understand what is happening with Bitcoin, the big picture, I don't think so. It remains incomplete in my opinion. So this is the most essential um, information in my opinion, no matter what kind of trader you are. Okay, so when it hit this all-time high, it retested this level and then it went up, and it retraced deeper than anticipated. But still, this is acceptable level. If it would have touched this, then probably would have been a big trouble, because then it would be like very risky. That's why we had this red dashed line here indicating this is where we should be on high alert as far as big trend is concerned. And this is still a valid number. We have to be on high alert on a major support point of view or trend level support point of view. Okay, so this level was this bounce. Now we are zooming in. This bounce was so significant from this level, especially last week's candle was the most important candle. It is very common to see that there is always a reaction like this, like what we saw here, what we saw here. You would see a green candle in between because no asset fall forever. There's always a bounce. However, when you get a second one like this, it gives you the confidence. So this was a real game changer for this and downside move. Okay, so let's talk about some terminology. Um, this is called main trend. The yellow dotted line is called main trend. This is what we are tracking. This is the uptrend we are tracking. This is the bull run we are tracking, right? So this is a main trend, the yellow dotted line. As part of that one, this is called counter trend. This is a counter trend, means it goes against a main trend. So it's called counter trend in TA definition. Then when the counter trend completes, the main trend resumes like this, and there is another counter trend. Okay, this is a counter trend, means the trend which is going against the main trend. So you may say the yellow dotted is level 1, okay, and then there were two correction, 1 and 2, counter trend. Then you can always zoom in and dissect. Say you take this counter trend, which is the whole entire region, and then you break up. In that breakup, what you get is zigzag. So this is first downside move and a recovery. I purposefully name it differently. This is not a formal name, but I say because I am not calling is a main trend, because this is a recovery. That's why I'm saying recovery, just to distinguish. Right? So this is, I'm breaking the counter trend into further sections where this is the first leg and then a recovery, and then this is another counter trend, right, within that, right? And then this is a recovery. Then what we are seeing is a recovery attempt. So this is where we stand. So um, the whole entire thing is consolidating, but now we are breaking that consolidation into further. Maybe I should use different color like green color. Okay, so this is level 2 structure, so to speak, right? It depends at what level you are doing it. So we have basically broken down the whole entire consolidation into further, and you can you can further break down this one also, if like, just academically, I mean, if you want, you can say this is my first leg down and then consolidation. So you can have two segment. if you if you break down this if you break down this recovery, you can say this is the recovery, then a counter trend. Yeah, this is the uptrend, let's say, then a counter trend, and then there's some and a uptrend again. If you want to dissect even further, maybe with a blue, I don't want to clutter it, but just to explain. So you can you can go even further, say this green wave, which is recovery wave for us, you can split into even further. So as part of recovery, this is the first leg, then a downside, and then upside, and then it ended. Similarly, when it when we can break down this one as well, right? So like this was the first leg down, and then a rise, and a second leg down, and a rise. Now the thing is, so you can break down like this, right? You're breaking down whole entire. Now maybe I should keep the green here only. I'll tell you why. Because right now it's here. We are not saying this has to change and convert into this kind of a wave. Then we can say this particular wave is like a green one. Then we can say this is really something like this, right? Then we can say the way it recover from here to here, we can say that that green dotted line start from here to here. But since blue is still here, we don't want to draw something like this, a parent one, right? So we want to keep it like here for a reason. Because what if it goes like this and goes like this and goes like this? We don't know yet, because this hasn't reached to the required level, which is 50k. Here it's 53, but 50 is okay. 53k is more conservative level, which is point of rejection of this level. So 53,500 is more conservative. I gave 50k from my estimates. So anyway, so point is this is 45k, which is not 50k. So from this particular wave point of view, this wave that you saw, down, up, we cannot say this has reversed. This is called a bounce. This is called a recovery wave like this one, but it's not somewhere here where we can say it has recovered fully. We cannot say that. Okay, so here we can say it recovered fully. This is where we cannot recover safely. But the good news, what is good news, is that it is bouncing and it is away, moving away from this low. So that's the good news. However, it hasn't reached to the level where it is supposed to be for us to say this is going to recover like we saw earlier. So this green dotted line we cannot draw like this because it it is, I think it makes sense that we should only keep it like this because this is still here, not here. When it is here, it makes sense us for us to draw like this. Okay. Uh, what should I cover? I think I covered a lot. Yes. So this is like, to me, this is, if you understood this, whatever I explained, I think you understood the most important aspect of Bitcoin price action. I tried to be as simple as I could be without losing any detail, but at the same time explain in a way where you don't need to be technical. I try to use language which can be understood for someone who is not even TA or not even aware of basics. Mm, So anyway, so that was my attempt. So now we are here from a macro. What we need is about 50K, right? So far so good, but at the same time, we have those three levels which I talked about on Binance, right? So if they start breaking below, just in case, it's your choice what to do. As I said, I'll start reducing. That's my choice. But what I'm sharing is not to be treated um, as an advice. I sometimes do share my stuff when time is very critical. And why it is critical? Because of the reason I said. I, let's say if this bounce fails here, comes down to this, and assume even if it comes down here, it's not going to create any major havoc. Only if it breaks this low, then it's a problem. Here, if you look at, you can say this low is comparable to this low. This point can be comparable to this. The history never repeats, but sometime, let's say if we take something similar, even if it comes down to this, it doesn't put the recovery in risk unless it makes and breaks below this level. Because if you look at, this was actually a low from a price. It's not a, it didn't close, but there was a spike. So price wise it made a new low, but it was intra week spike. Okay. But anyone who had a stop loss here would have stopped out and so on. Anyway, so point is, it didn't break this low, it broke this low. So similarly, this low, even if it comes down, what is the most important line is this line, which is around 28,500 level. If this is taken down, okay, then Bitcoin, as we know, will never well, sorry, I should not say never. That means we are not talking about new all-time high. Okay, then we are talking about reset of the entire wave, where it could go start with 19K, 18, 19K, and we'll see from where it could go from there if it happens. So that's a bear scenario. But we don't want to talk about bear scenario because right now that's not happening. But just wanted to touch base that this level is the most important level from uh, June 2021 level, or same level, because what we saw here, like it, this level, if it is touched multiple times, it breaks. So what we don't want is it comes down here and keep touching this level, because if that happens, then it will break down, right? So at this moment there's no risk, but we have to be keeping an eye. And everybody thinks differently. As I said, people would wait for this level to be broken, some people take action earlier. Everybody has different planning. And yeah, there's no right or wrong thing, it's a choice. Ultimately it boils down to the situation where how much you are ready to lose. That's the question you should be asking from risk management point of view. How much you are ready to lose, that is your stop loss. People look for stop loss at support. That's not the right way. Okay, support is not stop loss level. Support can be stop loss level if it is acceptable to you, but not necessarily it is. First, the question is, if the support is given at certain level, are you ready to lose that much? If not, then your support will be stop loss will be higher, and so on. So, but you refer my best practices. The risk management starts from the buying, not when you sell. Before buying, the risk management starts. How much amount you spend, and the risk management starts with that, not about the price level where you exit. So those who are not taking care with the money that they spend at the time of buying, they have very less freedom in terms of risk management. If you buy small, you have higher tolerance. You don't worry about movement, percentage movement, like 10, 20%, whatever. There's always a limit, but you're not bothered. In crypto, if somebody is getting panic with 10, 20% movement, to be honest, that person is not ready for crypto. As simple as that. This is not stock market. Because if one is expecting higher return than the stock market, that the person has to be ready with a major downside move as well, or volatility. You cannot have both, that you will get tremendous 1x, 2x, 3x, 10x kind of a move in very short time compared to stock. In the same time, you somebody would expect that it would not fall or remain like stock market level, you know, correction. It's not going to happen. So anyone who is getting scared with 10, 20, 30% of drop, I think the person has to educate himself or herself that this is crypto. And having said that, the it doesn't mean that you keep watching 30% drop. Okay, the risk management start, as I said, from the buying point of view, how much amount you spend. And the major mistake people do is by overspending to start with. So yesterday or day before yesterday, I explained this is like Bitcoin is recovering, right? I explained you don't try to jog when you are having fever, or as you are recovering from a fever. Okay, you cut down your activity, physical activity. I'm talking about, because you are not fully recovered from your physical health point of view, right? So it's but natural when we do that. If it's not that you cannot jump when you're sick, you can, but the point is then you're risking, right? So buying fast moving alts when Bitcoin is recovering, you can do, but there has to be control. And if you don't control, then you have to face challenges, right? So if you are willingly facing challenges, then it's all right. Some people I met, they buy, say, I don't care how much they drop. That's a different thing. But I don't assume everybody's like that. Some people say, I'm here to lose. I'm okay. So that's a choice. But I'm not assuming that's the right way, because that's gambling. And I'm assuming everybody would like to be a better trader. And it's crypto doesn't mean this is gambling. It has to be traded like you do stock trading, in my opinion. There has to be discipline, there has to be planning, and so on. That's why I spend a lot of time explaining all this. Okay, so point is, personally, I would say when you take alts, you take more risk because their percentage movement is more. When you take BTC, there's always risk somewhere, but risk is lesser. So the good approach could be you think about alts, especially those move fast, when the BTC is at a safer level. There's no absolute safety, but a comparatively safer level, probabilistically safer level, which about 50, 52, 53K level. There you spend more on alt. That makes sense because then Bitcoin is likely to move on upside, not on downside, right? So there's no assurity. Like for example, this recovered fully, but it came down here because it has a prolonged consolidation, not just this much. So the consolidation is is actually extended here. So that's why there can be more zigzag lines. So in a worst case scenario, it could like do this. Don't be surprised. Don't be surprised. Something like this, and then it could move up. And during this, Earth would go mad, really mad, really mad. So you never know if Bitcoin would do something like this. It is possible because this kind of a consolidation where the wave will have a shorter and shorter wavelength going ahead, and then make new. If you look at this is low, this is higher low, this is a higher low, and this is a higher low, and squeezing, and then it could squeeze like then the breakout level could be here. We don't know yet. Everybody thought breakout would be here, but it didn't happen. Now people are saying the breakout would be like this, but it may not happen. It may stop here. It may stop here and retest this level, and then come and bounces, and then this might be the path. Nobody knows this. You can speculate, you can assume, but nobody knows this. So my point is, I would personally take a more risk when Bitcoin is here, because the probability of breaking out on the upside is more when Bitcoin is in this region, not when it is here. So my style or best practices that I offer is, the risk can be increased when the BTC's health improves. And the BTC health improves as it moves towards 50K and higher. Okay. Until and then, you can say this is like any ordinary bounce, a good bounce, but this is not a bounce which is high enough to, we can say this is reversed. When it is here, we can say it is reversed and then could go up. So because people think from very short term point of view, because if it has to go up, this is my first major resistance level, a major one. 100K is here. Why? I don't know. 100K is not the level. It's a common sense. See, Bitcoin, you don't have to be TA. Bitcoin reached 60K. Do you think Bitcoin's new level is 100K? That's it doesn't make sense. It has so much of consolidation. If it has to break out from here, do you think Bitcoin will stop here 100K? No. If it has to break out like this after this consolidation, it has to go 200, 250, 500K or even higher. So my point is, people burn themselves a lot over here rather than waiting for this level and then think about more risk potentially, not a blind risk, calculative risk, right? Because when you talk about small cap fast moving alts, so again, this is one of the best practices, not financial advice. As a disclaimer, what you should do, it should be your choice, but I'm throwing some ideas here, especially those who joined recently. that you when you drive, you don't start on a top gear, first gear, second gear, third gear, and then go top gear, right? Similarly, in my opinion, when it starts recovering, you start with first gear, second gear, third gear, you change the gear. It is similar to changing the gear means taking more risk, maybe, right? In that case, in trading terminology, you don't take a lot of risk here. You try to be conservative. And how to be conservative? Two ways. You go for Bitcoin, which is slower moving coin. And second is you don't spend 100%. You keep some cash in hand. So that's where you slow down. Going faster means putting all, you know, adding more and more and going 100% in with all. You may not need Bitcoin as in your portfolio if it, because then alt would do well. In future, alts are likely to do better in terms of percentage gain, but alts would do worst when Bitcoin is in trouble. So it is prudent, it is wise idea. I mean, it is practical for anyone to think about more and more alts only when Bitcoin is out of this mess. It is still in the mess, right? It's recovering, but it's not recovered, and this has to be understood. And this has to be understood. Yeah. So I hope this session will be very helpful. I know we are supposed to cover all the arts, but I found this is important, and probably I'll break this session into two and stop the recording here, because this topic requires different. I mean, we have just covered Bitcoin and TA stuff and risk management, portfolio management, and other stuff, best practices and all. Right. So I hope this will be very useful. Um, and so yeah, let's end here and then continue with the analysis, usual analysis weekly.